Hello everyone, welcome to Full Circle Trader. So first of all, I'm really sorry for not coming in last 2 to 3 days due to some of the personal issues that I have. So let's wait for 5-10 seconds and then we will start. In the meanwhile, let me just share the screen. So a lot of unexpected things has happened in the past 2 days. I have taken few of the trades which I have shared in the YouTube post as well, in the community post. And I hope that you all have also taken good trades. So there is a very interesting thing I have observed in the market, which I wanted to share with you all. And I think I have seen it after a very long time. So we'll start with our market outlook, and let me just share this in the beginning of the video that this is going to be a Nifty specific video because I personally focus more on Nifty because I think I found more opportunities in this in the Nifty, and I also believe that from the safety point of view, and especially for the people for whom I'm making these videos, who are primarily the office going people who cannot devote much of their time in analyzing the markets. Even for them, Nifty is comparatively safer than the bank Nifty or the other markets. So probably I'll cover them in separate videos, but this is going to be the Nifty specific video. So just keep this in mind. So probably if you are someone who trades mainly or mostly in bank Nifty, just don't get disheartened. But I'm sure, and I can assure you that this market, this analysis will give you some perspective about how the markets will behave or react in the coming week to come. So we can see that the market has remained in the upper 50% of this good buying day here, this green candle. This candle doesn't look like the same in the futures chart, which is a very shocking thing because it looks very differently. And will share when we see the data points, we'll probably see that why the candle in the futures market chart looks very different than on the index chart. So this whole scenario which has recently developed, which is clearing above this resistance area and this selling kind of day, but eventually buyers came in and this candle remained at the upper 150 of this green candle bar. It all suggests that the buyers are quite active, the markets are active, and the scenario which was like building few days back is not there anymore. The India VIX has kind of also moved below 13. So a bullish scenario is building up in the market. So we should not get any kind of wrong bias here. If you look at the this is I think the bad thing because of the mock participation by the Fyers in this mock drill, or I'm sorry, the mock trading session by the exchanges. So the weekly chart, even it looks very bullish at the moment. This is the Nifty hourly chart, and we can see that it is continuously moving to the upside, clearing all the nearby resistance areas. This is the recent resistance area where the last trading session prices have stopped. And if you just look at closely, prices open here, they reached back again to this area, but again the selling came in. So this looks like that around 18,530 level, where the open interest has also built up a lot. market is giving some kind of reaction, but probably it is not going to sustain for a long time. There is one thing that I wanted to show in the 15-minute time frame, however. If you notice the slope of this rising 20-period moving average, it is a steep slope. And we have, observed from the historical patterns that whenever there is a steep slope in the moving average, prices turn to fall from there. So ideally, just clean this up. So ideally, the slope of moving average should be something like this, that suggests or that indicates the steady upside movement. But in this case, 15-minute chart is indicating that kind of steep slope is there, and this may act as an M-top pattern. So probability is the prices open somewhere here, it might gonna, break this nearby support area. Now, the question is not that what if the support get broken? The question or the real question is that how much it can move down if at all it breaks down below this support area. So we have this first line in the sand, and then we have the second line in the sand around 18,300 level. This is around 18,400, 30-40 level. So I think if this level is going to break, prices do not have any strong support to the left, and prices might come down here. But looking at the whole scenario, what has happened in the past and the overall scenario building in the US markets, European markets, and even in the Asian markets, it doesn't look like the case that prices should come down or break the support areas. And one reason that why the markets have turned to the upside is mainly because of the FOMC minutes that came just few days back, wherein the Central Bank of US has declared that they are gonna, hike the interest rates less aggressively. Now, that is something which is a positive news for the market, and I believe it is gonna help all the equity markets across the globe to move to keep this momentum to the upside. Now let's just see the Nifty futures chart. So this is what I was talking about. This candle here on the futures chart is very different than what we have just seen in the Nifty index chart. This is a complete green candle, whereas in the index we have a red candle here. And if you look at the price, it is 18,600, whereas Nifty index is, it is around 18,500. So there is a good, over 100 points of difference. Now we know that futures market are monthly contracts. So, Nifty reaching at 18,600 when the underlying is just around 18,500 suggests that people are bullish in the market, people are buying this market, and which is why the futures market is moving so aggressively that it has created a wide gap between the underlying and the futures contract. And if you look at the open interest, so it has steep upside movement in the open interest. So a lot of open interest is building up, and probably when we see the open interest, the option chain, we'll see that put side is quite aggressively, the put writers are very aggressive on building up their contracts in the option chain. If we look at the PCR value after this steep move to the downside, which suggested that the call side open interest was building up very aggressively, it has reversed back to the upside. So it was a fall sharp when the 18,300 and 18,500, right, 18,400 even, the call buildup was huge. We have just seen in the last to last expiry, and now the PCR has again moved up. So it has came down at these levels where, from past we can see that whenever the PCR has reached to these lower levels, it has rebounded from here. And this is what has happened. It came down here and then again, put side has built up so much. So again, it suggests that, put writing is there, and when put writing is there, that indicates that the supports are going to be, strong from the next, trading session. Now, this is the option table here, and we can see that there is, so we have quite a good open interest around 18,600, and then there is a huge buildup around 18,900, and then 19,000 has the highest open interest. But at 18,900, we have seen a huge increase or change in open interest. So that suggests that 18,900 is going to play a vital role as resistance. And if you look at the put side, we have 18,300 with the highest open interest. And I think most of the open interest from 18,000 has also been shifted to the 18,500 level, where the change is around 73%. So, scenario is changing gradually over time. And I think people who were, kind of very bearish in the markets have all got trapped in the last expiry, because there was a huge open interest in the 18,400, 18,500, and now prices have moved past these levels. So which means that, probably we will see, that people will going to, come out of their contracts, will close the positions, and probably more open interest will build up in the put side. So this is all in this analysis, in this market analysis. Hope you are learning from it. And as I have mentioned, for scalping in Nifty, we need to be a little careful, because the 15-minute chart is suggesting that we might see some kind of a breakdown and lower prices. So wait for the right thing to happen, because the higher time frames are suggesting that the market should move up, as we have just seen, and correlated the futures market and the data side put call ratio, that all suggests that market should move from here, right? But this intraday time frame is suggesting that we might see a short-term M-top pattern, and we may get some kind of shorting opportunity as far as the scalping in Nifty is concerned. So that's about it in this analysis. Hope you have enjoyed. If you have any questions, as always, please post them in the comment box. And so let's catch you up in the next session soon. And I'm sorry again for not coming on time and coming late today and not able to make it in the last 2 days. So if you have any questions, just ask, and then we will see that how the markets will unfold itself on Monday. So take a good care of yourself and see you soon. Bye-bye.